Hi guys, welcome to another 360 Partners video. Today we're going to talk about something that's quite relevant to a lot of taxpayers, both businesses and individuals, and that is motor vehicle or car tax deductions. And specifically we're going to talk about what the logbook record keeping requirements are, because they're quite important, as you'll hear towards the end of this. We'll talk about a recent case. So, okay, motor vehicle tax deductions. Most individuals and businesses at some point will be using a vehicle in the conduct of their business or the conduct of their employment, and whether it be using it regularly or infrequently. And given the cost of operating motor vehicles and owning them, the tax system does allow taxpayers to claim tax deductions when they're using those vehicles in their business or in their employment. So there are a few rules around it, and there's a few different ways you can calculate your tax deductions. So we're going to talk today about the logbook method, because it basically allows you to claim a percentage of the total operating cost pool for the vehicle. And depending on the percentage that your logbook computes, so if you're getting a business percentage of say 35% or more, we typically find in business usage compared to private use. And if your cost pool for operating that vehicle is in the order of say $10,000 or more, and it's pretty easy to get up to that number if you take into account your petrol for the total year, your registration, your insurance, repairs and maintenance and servicing, interest on any finance you've got for the vehicle, and then depreciation on the cost of the vehicle. If you add all of those costs up each year, it's very easy to get to $10,000 or $20,000 for the average vehicle. So the total cost pool is pretty high. If you can get a logbook percentage that you can substantiate, obviously genuinely, of 35% or more, then you can get pretty lucrative tax deductions, and better than the cents per kilometre method that an individual would typically get. But most importantly, to use the logbook method, you have to have a valid logbook. So let's talk about what a valid logbook is. So basically, in terms of what the content is, a vehicle logbook is required to be kept once for a 5-year period, and you've got to keep that logbook for a 12-week continuous period when you first complete it. And that is all you have to do, basically. Then you can put it aside, and you can rely on using that percentage that's calculated in that for the subsequent 5 years, unless your pattern of use changes substantially. So in terms of what the logbook must contain, it's relatively straightforward. It must contain the odometer reading of the vehicle at the start and at the very end of the 12-week period, so that you know how far the vehicle has travelled in total in that time. It's got to, for each logbook entry, you've got to record the total number of kilometres travelled for each journey, so the start and end of the odometer for that particular journey. You've got to keep a note of the reason for that journey. So, and there's got to be a bit of detail around that too. You can't just put client visit or something of that nature. And that detail will essentially allow you to calculate at the end of the 12-week period. You can look at all the business trips that you've listed in there. You don't need to list the personal trips because they're considered to be everything else. And you'll calculate the total business trips, kilometres. You'll then be able to also look at the total kilometres the vehicle travelled, and you'll come up with a percentage that was business. Let's say it might be 50% of the trips are business, or kilometres travelled are business. And therefore you can take that 50%, you can multiply it by the total cost pool for that particular tax year and claim a tax deduction basically in accordance with that calculation. So it's pretty lucrative. The ATO are obviously aware of the fact that the value of motor vehicle tax deductions is very high. So the ATO are devoting a lot of resources into compliance and audits. And really, when they have these audits, the first thing that they really focus on are the logbooks, and they ask, please provide us with it. And interestingly, they have been quite forensic in their approach to analysing those logbooks. So we had a client that was subject to a business FBT audit for their vehicles several years ago, and The ATO took about 2 months to actually analyse the content of that logbook, and they actually went and cross-checked the entries in that logbook against the CityLink toll road records that a separate database had that they were obviously allowed to access. We didn't know anything about them accessing those records, and they came back and advised us that there were journeys that the client had noted in their logbook that indicated the car was at one place, and yet they had toll road records that it was somewhere else. So there were a couple of those apparently in the logbook. The ATO invalidated that logbook, and after that they said for the previous 4 years worth of claims, which they're allowed to do, they went back and reversed all of the tax deductions the taxpayer had claimed, and this amounted to, I think in this case it was a pretty high value vehicle. The tax bill for it at the end was more than $100,000, so that came out of nowhere. And really it's all because I'm not exactly sure what that particular client taxpayer did, but they didn't take enough care in producing their logbook and calculating it. So there's an interesting case fairly recently where someone claimed that was appealed by the tax commissioner, and the tax commissioner anyway won this case. The taxpayer claimed 91% business use for their Mercedes car. The court found that there were several inconsistencies in the logbook data. They also found that the data seemed to have been entered into the logbook in a batch rather than what they call contemporaneously, which is fairly immediately after the end of the trip, which is the requirement. And they also found that there was insufficient detail in the trips noted in the logbooks. They literally just had, customer visit, and the court found that that was insufficient to meet the substantiation requirements for the vehicle logbook. And the commissioner then went back 4 years and amended the taxpayers' records with a pretty big tax cost. So the moral of the story is you really need to take a lot of care with these vehicle logbooks. They can amount to big tax deductions. If you've got any questions, please feel free to post them up, and we'll endeavour to answer them. Otherwise, we'll see you next time.